US Federal Reserve keeps interest rates unchanged for fourth time amid elevated inflation. The US Federal Reserve's Federal Open Market Committee (FOMC) has kept interest rates unchanged for the fourth consecutive time at a 4.25% to 4.5% range in its latest meeting. The American Central Bank has maintained the same level since December 2024 amid ongoing geopolitical tensions and trade related volatility. The Federal Reserve said in its policy statement that although swings in net exports had affected the data, the economy grew at a solid pace with a low unemployment rate, but inflation remained somewhat elevated. According to Federal Reserve's dot plot chart projections, the median of federal officials expect to lower the key benchmark interest rates by 50 basis points in 2025, indicating that there could be two rate cuts seen later this year. Economic projections by participants from the meeting pointed to further stagflationary pressures alongside downgraded growth expectations and high inflation forecasts. It projected the gross domestic product to advance 1.4% this year, a drop from earlier 1.7% forecast in March. The core PCE inflation is projected to reach 3% by the end of the year, while the unemployment rate is expected to rise from its current level of 4.2% to 4.5% this year. US Federal Reserve Chairman Jerome Powell, in the post meeting news conference, highlighted a recent uptick in inflation expectations in his opening remarks and said that trend may be tied to tariffs. He added that even with so an increase in tariffs this year was likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in price level. Thank you for listening. Thank you for watching. Thank you everyone. Bye.